Here we go, ladies and gentlemen. We are live for Palantir Weekly number 43.
We're getting
Yeah, you better ring that. It's so late.
43 weeks of doing this. First of all, shout out to everyone who's going to be here. We're doing something fun tonight. There is a live StreamYard link. We're going to be talking for the first 20 minutes. And then if anyone wants to join, you guys can join and ask a question, hang out, chill with us. If you ever wanted a chance to be on the pod, today is your chance. But before we get into that, let's talk a little bit about how you guys are doing, especially with this market. Palantir below $7, S&P now at 383. Let's start off with you, Dom. You haven't been on the pod for like a month now. How are you doing with everything going on?
Man,
I see you just cracked open
as he goes like
it's a sparkling water.
Oh, okay.
Sure.
Sparkling water with a little bit of rum.
Normally it'd be bourbon neat, but I already had that. Yeah, I'm glad to be back. It's been crazy at work. Definitely been taking advantages of dollar cost averaging when these abrupt changes happen. Very, very emotional market we have going on right now. And I bought some Tesla recently when it hit 153. I was like, thank you. And they keep.
Steven, how do you feel about that? No, I'm just kidding. Go ahead, Dom. Keep going.
Oh yeah, I know. Me and Steve can talk about our thoughts on that later.
Well, Dom, I'm inviting you to the unofficial Christmas special at that rate now.
Yeah, I'm announcing it now. We're doing a Christmas special. Is Tesla overvalued or not? We're gonna have like 10 people join, and we're gonna get a big ass audience on Christmas and talk about Tesla. So we'll do.
I like it. I'd love to join that. And then when I saw that Palantir was under 7, I was like, oh man, gotta get some more shares for my dad. And whatever left cash I have, go get some. So it's gonna be like this for a while. And yes, Blake, I'm definitely still buying ABCL. ABCL is doing, what I was hoping they were going to do, and they keep signing bigger. Abcelera is the company. They just signed a big deal with AbbVie. Right now, looking for companies that don't have a lot of cash burn and have a good amount of cash in the bank and little debt so they can weather the storm. I think the storm will still be up and down for the next, 6 to 12 months. And one of the things that we can take from this is no one can predict this. I don't care what anybody says of it going into a recession, not going into recession, soft landing. There's so many factors at play, right? So when you look at like what happens if, somehow by a miracle the Russia-Ukraine war gets, at a treaty, and then those things stop, right? Or we start, getting more legislation where we start drilling and being energy efficient again with the Republicans having the House again. I mean, there's just so many different factors. What I would say is I'm just looking for great quality companies that can endure during the tough times, and it'll pay back, 5-10 years from now. James asked what percent of my portfolio is Palantir. I think I'm like 17-18%. So getting up there and still adding when it seems like just too cheap to ignore.
Yeah, I was just about to say before we go to Matt, when you see it below 7, you get excited, right? I get excited too. I really get excited. I'm just like, this is stupid and this is fun and this is not a sad moment for me. Yeah.
Yeah, and I looked up like all these different things that have happened the last 2 weeks with Palantir, so we can talk about later. We can talk about just what they've done in 14 days. It's been pretty phenomenal.
Agreed. Matt, how are you doing? I know you have. So I've been binging all of Matt's old videos. And apparently this guy in 2019, 2017, he was making like a lot of money off of it, just as dividends alone. So you must be down a lot, which is a compliment because you can afford to be down a lot. So how are you feeling with everything going on?
I think I appreciate you asking that, because I think about 6 months ago, I was having like a miniature like heart attack because in 2020, my portfolio was about 2.5 times the size, right? A lot of it's additional contributions and stuff the like, but also the market was really good in 2020, 2021, the second half, and obviously full year 2021. So that being said, like when it came to being down in 2020, I was down like just over $100,000, and I was like having miniature heart attack. And then obviously with the portfolio being much larger this time around, you start to see, when the whole market goes down, how impactful it can be. And I guess to give people a lens, I'm not a trader. I'm more of like a long-term investor. So like you, Dom, when I see the opportunities, I take them and I continue to add into them. But I also take these times to kind of consolidate the portfolio and really look as a strategic lens to understand where, and I'm going to get to a good point with this, where I think I should redeploy capital. It's during the times when things are really good that I just continue to add more and more positions. And it's times when, like this, where you have elongated times of drawdown, where I'm like, why am I even in this position in the first place? And I take that opportunity to trim that position and consolidate and get ready for when things kind of come out on the other side. And I feel like we're getting to that point. I feel like, obviously there's more times to go down, more likelihood than there is up, because obviously we're still raising interest rates and stuff of the like. But I'd say if you asked me 6 months ago, I was having like miniature heart attacks and like losing my nerves a little bit, but now I'm calm. I feel like, I'm weathering the storm, just like how I felt, 2020 was a lot quicker than this, but, having that opportunity to continuously add over the course of like, I guess, really 12 months in this drawdown period is just another
Is there any need for you to tax loss harvest, or you don't?
I don't really worry about that. And to be very frank, like you can only count $3,000 to $6,000 a year, right? Like I'm not trying to be a dick, but like that's not really enough for me to really be like, oh, I need a tax loss.
So you are thinking of this as a opportunity to really consolidate, and when we get you're just betting that the companies you picked, because I know you're in indexes, but a lot of it is individual equities. You're kind of betting on your due diligence that in the next 36 months you will come out of this alive.
Oh yeah, I mean it's nice when you have the opportunity where a lot of your stocks, like for example, it gives you an opportunity to take a second look at some companies that you might have put money into. So I thought Virgin Galactic, right, was either a zero or a potential hero, and it took too long, right? They're just moving too slow. They're dragging their feet, and so I took that money and I put it into Rocket Lab. I have much more confidence in Rocket Lab. I see much more consistent small steps being done at Rocket Lab. So it's things like that where you're, very similar bets, right? It's either zero or it's going to 10x or 20x. And I was just like, well, why am I betting on Richard Branson, right? Like it's something for him where it's kind of like play versus for I forget what his first name is, but Mr. Beck over at Rocket Lab. It's literally his baby. It's his full-time gig, right? Like he doesn't have Virgin Records and Virgin Air and all those other things that he has to worry about. So it's an opportunity to consolidate and trim positions like that. And same thing with what's another position? Exxon. I made a great amount of money in Exxon. I work in oil and gas, so obviously I'm very bullish in it. And so when 2020 happened, when prices went negative, everyone's freaking out saying oil's going to zero. Nobody uses oil anymore. And here we are 2 years later, still using 100 million barrels a day. But I think the price environment has changed again, right? We're down 45% from peak oil prices just a couple months ago. And same thing with gas. Gas topped out in the U.S., not talking about Europe, but in the U.S., $10 an MCF. And here we are sitting under $7. I think the good quarters are behind us, 2Q, 3Q. And working in the industry, I know that inflation in the industry specifically has got up 25%. So margins are going to shrink. And I don't think people recognize that. And equities, for a lot of the cases, and oil companies are only down 5 to 10% from all-time highs, where the environment is getting squeezed already. And I think people aren't recognizing that. So I took that opportunity to take Exxon, trim that position. When was that? In August or something like that. And put half of that in the S&P 500 and put half of that into Shell. I think Shell's a great long-term play. So I'm not getting out of everything, but I'm consolidating positions where I think that there's better value.
Last question to you before we go to Stephen. How many individual positions do you have in the portfolio?
Oh, man.
that are like big, you would say like parts of the portfolio, like 10, 20
Big
different
enough.
stocks?
I would
Yeah.
say big enough to like even mention like less than 15.
Okay.
Yeah, I mean, the majority of it, I'll just be blunt. The majority, like the big ones off the top of my head are Shell, S&P 500, which is a SPY, JEPI, which is a dividend income fund, Devo. I really like those. I also have XYLG, which I think is pretty cool. It's like a 50% S&P 500 covered call fund, but it's also just 50% just regular S&P 500. So it's not as aggressive in terms of a dividend as XYLD. Then you have Google, Apple are pretty big positions.
Okay.
Yeah, those are the top ones. Pepsi, Johnson Johnson. Those are really the ones that really ring off a bell.
Steven, how are you doing with the market? And here's the picture that you wanted me to share.
Man, Matt's going to love where I take this, considering he sees what's on the screen. I did not know that you were in the oil and gas industry as a profession. I mean, look, I'm a very long-term investor. I've been buying a lot of dividend stuff lately. I did increase my position on Palantir and SoFi, but I've been investing in BDCs. I've been investing in REITs and midstream operators because I believe they are tremendously undervalued. And you look at what's going on in Europe, these are not my numbers. These are from the good old United States Energy Information Administration. They're projecting that liquefied natural gas terminals across the European Union will expand their capacity by 5.3 billion cubic feet per day by the end of 2023 and expand by another 1.5 billion cubic feet per day in 2024 for a total of 6.8 billion cubic feet a day for new liquefied natural gas regasification capacity. You need pipelines. There's a reason why Berkshire Hathaway purchased 7,700 or 7,400 miles of pipe from Dominion, because you can't build them with all the regulations, with the land that you need, with environmental studies. You can get 20 engineers together, raise $100 million, and go build a product and compete. You can't start a pipeline company. And energy is the bedrock of every society. And renewables is going to be a component of the overall energy mix domestically and globally. And some of these pipeline companies are trading at really enticing values. You look at the distributable cash flow that they are throwing off, the large dividends. I love them. The three that I really like, Energy Transfer, I think is the best value, my own opinion, for many reasons. I love Kinder Morgan. They have mid 70,000 range of pipe for natural gas. And then Enbridge, because they're the only triple threat. They're the only one that I know of, and I've studied, I'd like to say the majority of them, that has their own gas utility company in their portfolio, and is the third largest by volume in North America. And they have, I believe, a $7 or $8 billion renewable portfolio. And the three of them range anywhere from 6 to, I believe, 8.5% on the dividend. So, I mean, look, I keep buying, stuff goes down, it goes up, but I keep dividends coming in, and growth can only be a percentage of the portfolio. It shouldn't be the whole thing, in my opinion.
I'm glad you brought this up, because I think one thing that I want to highlight before we kind of dive back into what you were discussing is what I was referring to was more of the upstream segment.
Yeah, well,
right.
I own Exxon. I love Exxon.
Yeah.
I mean, there's one that started looking interesting to me, and that was Cortera. So I'm doing some more research on them. But you had said Devo from Amplify. Not many people know about that ETF. It's a beautiful ETF that writes cover calls on a percentage of their portfolio. They only take the most stable companies in the S&P. It's
like 30, 35 companies.
Yeah, it's a small position fund, but it's all the quality names. And then you mentioned JEPI, which great fund for income. I love those. I own both of them.
Yeah, but I'm going to get back to what you were saying. I mean, specifically about the pipeline aspect of things. I don't think people recognize they're like toll roads, right? So even in bad environments,
Take or pay contracts or fee-based contracts, man.
Exactly.
I mean, you just described it perfectly.
Yeah.
You have to pay the fee. And the best part is they pay for capacity, whether they use it or not. And we are going to get to 10 billion people on this planet by 2057. You need energy. You're going to need more energy.
And not only that, but I mean, some people in the chat are going really wild about this, and I love this. Is like people are talking about Freeport LNG coming back online. That's been a reason why the price really declined from $10 an MCF in the middle of the year to where it is today, is because that's about 2 BCF a day of gas that can't be exported. And so obviously, if you can't export the gas and go to Europe, you're going to have way more supply in the United States than you can actually use. So obviously, the price has to come down, right? But keep in mind, in 2023, 2024, there's a great plot. I'll have to pull it up for you guys in the future, but I don't have it on hand right now, where it just starts to show how many more LNG plants are coming online. And so you look at the price discrepancy between what we're seeing in the United States, what we're seeing in Europe and Japan, and a lot of those other places that have a worse energy independence position than, say, we do. I think in reality, we're pretty good from a energy independence perspective. The price has to meet somewhere in the middle, right? Like you have the cheap feedstock of what we have in the United States at less than $10 an MCF. You have what we have in Europe, which peaked at over $100 an MCF at some places and $60 an MCF. So it's going to meet somewhere in the middle where the United States is exporting enough where basically you have this cheap feedstock. You could buy it at 10, sell it at 20, and make that difference. But eventually it's going to get to the point where it settles out somewhere. Where does it settle out? I'm thinking it's going to be like $12, $13 an MCF in the long run. But for now, I mean, everybody loves buying in the United States and selling it elsewhere because they can just make a crap ton of margin in between the two. Projects that were once just being shelved, like Alaska LNG and things like that, were just like, 2-3 years ago when gas was only $2 to $3 an MCF, nobody was even scoffing at. But now that we're in this crisis, and you can actually make this margin, gas is actually going up in value and the demand is there. It's making sense. And some people are actually predicting some of those projects coming online. And obviously you have this huge export facility, which drives a lot of what you're talking about. ET, Enbridge, Kinder Morgan, all those feeding towards where they can actually export in the United States and go to Europe.
Yeah, so I actually have all the charts you're probably talking about. I believe you're talking about all the export facilities that have been greenlit on the Houston Ship Channel. I have all those charts. I can bring them up later. But you look at the monthly dry gas shale production across the Marcellus, the Permian, Utica, Haynesville, it's drastically increased over the past couple of years. It's going to keep increasing, and there are only a certain amount of players that have adequate takeaway capacity. And you throw in enterprise product partners and MPLX, maybe Plains. I mean, you pick any one of them, great dividend play. And it's an industry where it doesn't even matter what the MCF is. That's going to matter more on the upstream side. With this, these companies are just collecting the toll, paying out dividends, and they've gone – They got killed in 2015 and they've never came back. And I still hear people say, I got kindered, or complain about Kelsey Warren. It's like, guys, these aren't the same companies. You look at their balance sheets and you look at how much debt they've paid down and the financial discipline that they've gone through to reduce their leverage ratios. They may have these guys still involved in the company, but it is a much different operation today than it was then. And it's still a hated industry that's looked down upon, and there's real value there.
Palantir has a lot of customers in that sector, including
Kinder Morgan's a customer of Palantir. Same with BP and Exxon.
Yeah.
So let's transition to Palantir. Then let's get into some of this stuff. So we're gonna do about 10-15 minutes of us talking. Then if anyone wants to join, that StreamYard link is there. Feel free to join, ask a question, hang out with us. It is anything is fine with us. So let's go over the deal that we got today. I don't know if you guys got a chance to see this one.
Yeah.
This is one of their 5 multi-million-dollar deals in 2 weeks. Palantir and Integrity Mold and Tool, a global pioneer in the tool and mold industry, today announced a partnership to deploy Palantir Foundry across their business functions. Multi-year $1 million deal will help optimize Integrity's operations from the factory to product design, scheduling, engineering, all these different things that Foundry can be useful for. CEO says, thanks to our talented and hardworking team, we extracted all the potential out of our current system, but we wanted a more advanced data platform to reach our full potential. What were your guys' thoughts on this deal?
Super excited.
Dom, you got it.
Why is this so important? This is important because this is a mid-market customer. Ranges from, I've seen they did $63 million in revenue to 100 annually, somewhere in there. They're projecting 230 million next year. Go check out their website. It's a very basic website, very, true to the industry and manufacturing. And, but they're starting to show their value at a mid-market level with customers that this is a big deal for them to spend millions of dollars on a software platform. And this is definitely a illustration of the power of their supply chain management software and Foundry. If you look at the press release, I mean, this is ultimately going to be their full supply chain from beginning to end. They're basing everything off of Foundry, and in hopes of having faster time to value than their competition and being able to deliver parts faster to their customers. So the fact that a company of this size is spending millions of dollars with them, and you can already check integrity.palantirfoundry.com. It's already live. I already checked that out. Just really encouraging to see a company of that size when we start seeing more and more of these kind of instances happening.
Okay. Matt, your thoughts on this deal?
I forget who it was. Somebody posted this deal or
Arnie.
the deal that happened a couple days ago. Was it Arnie?
Mm-hmm.
And I said, it doesn't really matter. Where's the $1 trillion contracts? Why are we still dealing with these $1 million contracts? No, I think I agree with you 100%, Tom. I think that this just goes to show that it's not just a big boys game where I think a lot of people think it is, where it's the Apaches of the world. I mean, you're now getting into the smaller sort of less than $5 billion company sort of market caps. And I think that that's going to truly open up a lot of customers for the future. And I think I'm just really curious now that we're kind of thinking about this and shrinking the size of the average company that's kind of getting involved with Palantir. Where is the cutoff point, right? Because I think a lot of people are like, oh, Snowflake, they can reach these small customers. And so my question is Palantir's really gone after the big guys and is more for the bigger contracts and less contracts, but bigger contracts, or less customers, bigger contracts. But I'm curious, is it $1 billion market cap, $2 billion market cap, $500 million market cap? Where is that cutoff where Palantir can truly play? Because I think a lot of people were saying, well, Snowflake gets all the smaller customers where Palantir is going after the big boys. And to me, this is just kind of showing that that's not necessarily the case. And so it got me a little amped up. I was pretty fired up, but I was joking around saying it's not $1 trillion. But I think a lot of hate goes out there to be like, oh, it's not a lot, but you only need, 10, 15 of these in a couple of months. And next thing you know, I mean, you're generating another $100 million in revenue a year. Anyway, I think that these small wins, and they're happening every single week. It seems like every other day you're seeing something else. And it's just another step in the long-term foundational pivot to where I think this thing's going to go exponential at some point.
I think the big difference that you look at their software is that people are building their business on it, right? This is an operating system, and the likelihood of them churning out of Foundry once they get all that data put in is very little. That's why you see companies like MongoDB and Oracle still to this day. Once you get your business fully functioning off of something like that, it is high stakes to high switching costs. And then we also know that they're continuing to develop new things and expand into other opportunities with Apollo and modularizing things. I really think it was real interesting, the deal before this one with the partnership with Crisis 24.
We got to talk about that one. After.
A lot of people didn't talk about who the parent company is. We can talk about that later. But yeah, like you said, there's just deals popping off left and right. What are your thoughts, Steve?
So Steve, but before you go, here's the chart you wanted me to show, and you increased your position. You told me last Friday. I was actually at a Halal Guys when I got your text message, and you were like, "I'm buying more."
Halal Guys. Sorry.
What do you usually get, Matt? You get a beef platter, your beef and chicken?
Oh yeah, and 5 lines of the hot sauce too. They're always like, "Are you sure you want 5 lines?" I'm like, "Give me the 5 lines, my guy. I can handle it. We're good."
Okay, all right, that's good. That's good. Steve texts me and he's like, "I'm buying more Palantir," and I'm in line, and I'm like, "Why?" He's like, "Cause they're everywhere." So, what are your thoughts, Steve, on this deal? And then we can go through this chart as well.
Yeah, so I was very busy the past 2 days. I did not see this deal from today, so I'm not going to talk about it because I haven't read it yet. I only know what you guys just said. But the Crisis 24 one, that's the compliance one. Am I correct?
Yeah. Yep.
Security,
Okay.
yeah.
Yeah,
The risk management one.
Risk management, huge, absolutely huge. And they're doing what they did with Skywise and Airbus. They are going to replicate it. They now are going to have a platform for EV infrastructure, insurance, semiconductors, cancer research, airlines, and risk compliance. I mean, these are going to be platforms that can be cross-sold down the value chain through these companies, and Palantir will generate revenue from it. And it goes back to the slide. If anybody from Palantir can get this to be in the quarterly reports instead of the CEO letter, I think it would be a great thing because it truly tells a story about the cohort and the customer count, and the black margin there is what you really want to focus on, because that is their net new customers year over year. And it is growing tremendously. And like everybody said, they are growing, they're getting more deals, and they're still a company that not everybody knows about. You look at where they were when they first hit the market. People who knew about them thought they were strictly a black box company. All they did was privatize security with the government, CIA, DOD. It's not the case. And it's being proven in these numbers with these huge jumps in their customer counts. And it's tremendous. And so I was very angry for a while with Palantir, and I said I was going to give him 4 quarters. The clock is still ticking, but I am back to being bullish instead of neutral because of Karp changing his tone and the interviews he's giving. And I think the deals that they are making are very strong, and it solidifies my investment thesis. And you can talk about valuation all day long, and Palantir could go to $4 or $5. I don't think anybody should be under a disillusion that it has to go back up, because it certainly doesn't. It could go down further. Nobody can predict where this market's going to go. And from a long-term investment, this is a company with $0 in debt. Rising rates don't matter. Not one bit. They have $2.3 billion in cash. They are utilizing stock-based compensation to incentivize and grow the company. They're not taking on debt. So take SBC for what it is, but if you're a 5 or a 10 year out and Palantir keeps going at this rate, I mean, they're free cash flow positive. It's hard to see them not doing big things.
Yeah, I would tend to agree. I mean, like the amount of deals we've seen, and we'll talk about Crisis in a second, but you had CDC, then you had Lockheed Martin, then you had Tampa Bay General, then you had the new deal we had today, then you had Crisis 24. I think, Dom, your point about these, at least some of these being, like Tampa Bay Hospital is not a Fortune 500 company, right? I doubt they're producing as much revenue. So them making these strategic partnerships and deals with companies and organizations that are rather small in the grand scheme of things, their average client per year is paying them, I think, $5.5 to $7 million. And it's like, if they could get that down, it's like 500,000. We could see the scale of it, begin to explode. The question is just what is their go-to-market and are they prepared to have that much scale if they get there? So let's talk about the risk management part of this. John, we'll start off with you. Their parent company, you thought that was a big deal.
Yeah. So it's almost like Crisis 24 is not necessarily a proof of concept, but if it goes and how they are anticipating with the partnership, and I'm sure they've been working together before, they're just formalizing the partnership and expanding what they're doing. I'll read it verbatim here. They are a subsidiary under Garter World, which overall is a services and security company. And it says here, Garter World is a global champion in security services, integrated risk management, and cash solutions, employing more than 120,000 highly skilled and dedicated professionals. This could impact a lot more industries, and it talks about later at the bottom about Garter World, that they have a lot of Fortune 500 corporations and governments they work with. So if they can, it talks earlier in the article about how they want to ensure getting better resilience and faster business outcomes for Crisis 24 based off of using Foundry and using that operating system to get real-time data. And that's obviously going to drive revenue and stronger partnerships and them kind of going together, joint partnerships to sell their platform together with customers. But I'm looking at the bigger picture of how if they get into the parent company, this is a much bigger deal than what, even Crisis 24 is. And they're starting to do things in cybersecurity as well. If you guys look at their Palantir blogs, their most recent engineering blog on protecting containers in Kubernetes, they actually have a competing product to what VMware has, so I can't say too much. But I was shocked to see that they're coming into my realm of work of actual endpoint and container security for infrastructure and for IT teams. And I was wondering if they were going to get into that. And so it's really intriguing. So they're tapping into, they're really trying to hone in on marketplaces and industries, and then let the referencing go, let the Tesla effect happen, right? When people buy a Tesla, they're the marketing tool, right? It's not commercials, dealerships, anything else. It's the same thing you see with CISOs and IT directors. And, I'm sure that Tyson's video impacted a lot of people on LinkedIn. I mean, it had tons of hits. And so when you have someone saying, hey, I spent 10 million, but I got 200 million back in return, A, that guy's getting promoted and he looks pretty good. But B, people are going to be reaching out and saying, tell me more about what this was like for you.
Especially in this type of economic environment.
Exactly.
Speaking of the stock price, I want to play a quick video of Karp acknowledging it because he hasn't in a while. And
is this the one from Fox? Yeah.
Yeah. First of all, Fox Business is treating Palantir very nicely over the past couple of months. I don't know. I guess they're a fan of them and they treat them well. All right, let's play it.
I love his hair.
That means you have to love my hair if you love his hair, because my hair is similar.
Could be our hair. I meant.
Announced last week, and we had one of your top executives on talking about a multi-year deal with the platinum version of everything everybody wants to be in healthcare, the Cleveland Clinic. Now you've got another one with the Tampa healthcare giant here, Tampa General. You are striking deals right and left, doing exactly what a company dreams of doing, and yet it's not being reflected in the stock. I know you're going to say, we don't look at the stock day to day, but how do you forget Wall Street, how do you get our viewers, look, it's up 2% right now, but everybody else to say, you know what, this one is one I really see a long tail.
This is the thing. While Wall Street and other people ignore us, we're printing free cash flow, growing our client base, disrupting the market in America, especially England, Canada, winning the best partners like Garter. And of course, the market shift. And when they shift, you're going to see a massive integral of revenue, the deepest entrenchment of the most important products that can't really be built by other people, with the best partners, creating value like with Garter that can't be matched. And that's why I'm very bullish on the long-term health of Palantir. And yeah, that's where we're at.
Do we believe him? Does that make sense? Free cash flow, getting the clients, disrupting from a technology perspective. When the markets shift, do we actually think Wall Street's gonna? They only have a 34% institutional float, 6.2, 11 by insiders and 50 by retail. So, do we think that the markets will shift and the macro will be friendly to Palantir when it does?
I think so. Yeah, I mean, I think it's very reminiscent of exactly where companies generally are before they truly get to their exponential growth period. Tesla was very much hated by Wall Street. Netflix at a point was hated by Wall Street in 2011 and 2012. And then eventually the prices goes exponential once things start to get in the favor and people realize that. And I think we're getting closer and closer to that point, because a lot of what Dom talked about, right? Initially, it was people in industries, specific industries, taking a chance using Palantir. And then they created these great systems that people recognize that have now been extremely fundamental and changing and creating value for their businesses. And then they can easily switch that to other industries very easily. And I think you mentioned that too. So it's not a risk for somebody to take on Palantir. Is Palantir right for me? And that's a very different place, right? That's not, hey, we're going to, dip a toe in and see. It's now like, hey, let's have the guys in, right? And we'll see if it works for us. If it doesn't, it doesn't. If it does, it does. It's a very different place. And I think that that's just one step closer, coupled with what was shown earlier with the cohort, talking specifically about the new customers and everything the like. I mean, that's just something I've always just continued to kind of look at, and the top 25 revenue average continuing to go up and to the right, and the customers and total retention rate continuing, free cash flow positive, no debt, all those things, coupled with just how bright Alex is. I mean, to me, and I've never felt more convicted in a position, but to me, it makes me feel like if it doesn't work, then something is fundamentally wrong in my mind. And I've had positions before where I felt conviction, but not to this extent. And maybe it's my bias or what have you, but I honestly feel like it's everything is trending the way I want. Maybe it's not growing revenue as fast people might like, but I think it's the consistency in which it is growing revenue.
Exactly.
Anyway, I'll get off.
You're exactly right in the fact that, to Steve's point, they position themselves in a way where now you have 50 million in gold bars, 2.3 billion in cash, 2.4 in cash, 3.2 billion in total with the credit you have, $0 at all at debt. So they foresaw this coming. And as long as they can keep their employees happy and understanding they're going to keep getting SBC and that's going to be worth a lot someday, and building a culture and stealing talent away from those getting laid off at Microsoft, Google, Facebook, Meta, whatever, they're growing on their time frame. They are focused on business outcomes and customer success that turns into quantifiable results for the customer that then turns into references. And when you do that and you don't have to worry about Wall Street breathing down your neck, you've seen them kind of hover at a $6 range. I think, people will hit the panic button if it goes to a $4 or $5 range. But if it's in that 6 or 7, they've been beaten up by Wall Street for now over 2.5 years, right? Or 2 years. But they're financially completely stable to grow at the pace that they're at. And the retention rate that they have and the uplift with the bigger contracts and the expansion, it's just a matter of time. It's like a steady grower. They're just going to keep we got 300 customers this year. We get 500 next year, 700 the next year. So it just, are you willing to wait for that?
Yeah, I think, Steven, yeah, go ahead. You got it.
No, go ahead, Matt.
I was going to make one point, echoing on Dom. The fact that the macro is so shitty right now, I think is great for Palantir, because would you want them producing massive amounts of profits and great margins and all this stuff in a shitty macro that wouldn't even like value it to anything, right? Like, if the market's not going to give Google a premium or Apple a premium, they're definitely not giving Palantir a premium, even if Palantir is worthy of a premium. So I think over the next 2 years, 18 months, as the market sucks and Palantir can slowly reduce the SBC, slowly increase the operating margin, get closer to gap profitability, then by 2025, as Corp was talking about, when we do have a better macro, interest rates do get back down to hopefully 2-3%. That might be that explosion, as Matt was talking about. But it's the best time to have a shitty business, because the market was never going to give your business any value, even if the business was worth it.
Well, and a resilient business too.
Right. Steve, go ahead.
Yeah, I mean, I don't think Corp really cares about Wall Street. I'm going to speculate for the simple fact that Palantir is not a distressed company. He has all the time in the world. They're not. Now, look, I don't know that they're not going to go under, but by the numbers, I think something pretty catastrophic would have to happen for Palantir to go under. And it's one of those things where he doesn't really care, because he believes in the long term, the market will turn in favor of Palantir. And look, Amit brought up a good point. Don brought up a good point. Matt brought up a good point. At the end of the day, they have their tentacles into everything. It is expanding and extrapolating through these specific platforms. I mean, I think the big thing that a lot of people don't realize on Wall Street, or people who even research the company, it's not just Apollo, Gotham, Foundry. It's the three main, and then you have all the other personalized systems that they created with Hyundai Heavy, Airbus, and all these other companies, that over the next several years, you're going to see the fruits of the labor on that. The one thing I took a little the wrong way from his interview was when he said printing free cash flow. I don't consider 191 million in free cash flow over the past 12 months printing free cash flow. Great. They are free cash flow positive. No question about it. But printing, let's get in the billions. Then you can start using the word printing free cash flow. But at the end of the day, you need a couple of years. And at some point, the market is not going to be able to sit there and say X and say Y. And I think that's the thing. Once again, I said this on the SoFi podcast. I'll say it on the Palantir one. I am invested in this for the long term. And my belief is at some point, they are going to turn GAAP profitable. They are going to continue to grow revenue. And at some point, the market, the analyst is not going to be able to say certain things that are negative to Palantir. And at some point, the valuation is not going to make sense. Whether we're there today or not is all opinion based. But if Palantir continues doing what they're doing, costs come down and they start getting to certain levels, if they don't go up, it's going to be a broken stock, not a broken company. And I'm not saying they're a broken company, but at some point, I think it's going to have to favor them if they stay on this trajectory. I mean, I have not heard a logical argument about why they will not continue to grow and gain customers. And you look at what the I forget who it was from the Tyson company. You look what they did in this economic environment. You're going to see companies continue to reduce, cut costs, and they're going to look for any which way to drive performance operationally in back office services. And if that means going through an implementation process, which everything that we've seen seems like it is not that drastic with Palantir compared to other companies, and if that's going to save them money on operating costs, I think that this is a company a lot of people are going to reach out to and at least take a meeting and see what they can do for them. And to me, that's huge. And bad economic environments do favor companies like Palantir because they provide a solution. Because every company has to look at the bottom line. and this becomes a tool in their toolbox.
Yeah, I think the point you said about a broken stock, that is a very possible situation that could happen if the scenario you just described plays out. But as Dom and Matt said, it's just like every time I see one of these new deals, it just gets me more excited because I'm like, yes, could we get the story wrong? We could. And all of us are investing in an individual equity, not an ETF, because we think we have a way better return than what an ETF can give us because we think we have the story right. So the question is, are we right on the story? I mean, like that's it. Either we're right or we're wrong.
Well, how about this? Are we right on the valuation? I mean, the story seems like we're right. The valuation is where the conversation really should go. Is it still overvalued?
Short term, it's overvalued, right? I mean, but I think it's at some point, right? Like because it goes back to like Tesla wasn't worth $1 trillion today, right? It was worth, of course, now the price has declined 50%, but people weren't paying $1 trillion for what Tesla could do today. People were paying $1 trillion market cap for what they thought Tesla could be: the robots, the energy, the storage, the everything, right? So it goes back to at what point will people potentially see the same in Palantir, or do we just have to wait it out? And it could be that slow grind to 2030, right?
I'm going to bring something up. Is Palantir an acquisition target?
It can't be because of the F shares.
Who would want to buy them? Who would want to take on all the controversy
I got 3 companies that would want to buy them.
You would fire Carp immediately if you buy them. You're not going to have Carp run it. Right?
I don't know. I think that this is I'm not saying that it would happen, like Dom said, the F shares and whatnot, but you think about it, or when I think about it, there are 3 companies that come to my mind. I'll give you guys you take some guesses before I rattle them off.
Microsoft.
Google.
Not one of them.
Oracle.
Yes.
Okay.
Got 2 more that I'm thinking of.
Salesforce.
No.
Accenture.
No.
Accenture. That would be interesting.
They're partners.
Oracle's up. We only got 1 out of 3, or Databricks.
You got 1 out of 3. They're bigger companies, over 100 million market cap.
IBM.
Over 100 million.
IBM.
That's another one. Got 1 more outlier. I'll give you a hint. It's one of the biggest companies in the world.
Amazon. Google.
Close.
One of the biggest companies in the world.
Facebook?
Don't say it. Don't say it. We got to guess this. Snowflake. Wait, no, Snowflake's not.
No, they're not.
You guys are so close.
NVIDIA.
Don't say it. Don't say it. Biggest company in the world? There's only
top
Apple.
company.
No, Apple's not.
Tesla. It's the only one you guys haven't said.
Netflix? No, it was like.
No,
wait, hold on.
You said Apple, you said Microsoft, you said Amazon, you said Meta. You haven't said the other one.
Don't say it.
I said Google, but
I didn't hear you then.
I said Google early on.
Yeah, I think we were talking over each other.
Okay, so here's why. Crazy 1 minute, crazy thought here. Google and IBM are not going to catch Microsoft or Amazon with cloud. It's not going to happen. I have a crazy theory. Google would be better off buying IBM because of their cloud and consulting services and the free cash flow machine that IBM is, and their hybrid cloud would fit great into Google's infrastructure. Same with their AI. But both of them, either IBM or Google, would benefit drastically by acquiring Palantir and integrating what Palantir does with their cloud platforms and also their consulting businesses.
Yeah, if Google wouldn't even take on the Project Maven contract, you think they're going to buy Palantir?
Yeah, but they get the IL6 with Palantir. They only have IL5, I believe.
Oh, they don't even have IL5.
What do they have?
They're IL4.
Okay, 4.
Yeah. You only have IL6's Palantir, Amazon, and
Microsoft and Amazon, yeah.
Yeah. And now they actually have an IL6 program they're trying to help companies charge to get IL6 certified, which is brilliant on Palantir's part.
It is absolutely brilliant because they can be the backer.
But I mean, yeah, that would throw everybody for a loop if Carp and Peter said we're done, we're gonna sell out. You know,
Think
I don't
about
see
it.
it
The
happening.
market cap is $14.58 billion.
Yeah, it's cheap.
It's not a big. Yes, it's a big company, but in the grand scheme of things, what does Google have in cash? 70 billion.
But I think that's why Carp is so bullish, right? When he said Palantir could be 20 times bigger, he's looking at 14, even 20, even $25 billion in market cap. And he's like, motherfucker, we can be everywhere. Like, I don't think his ambition is small, you know?
Yeah, but okay, to get to that, his ambition is obviously big, but to get to a bigger valuation, realistically, what do they have to get to? Let's look at Salesforce real quick. Salesforce is a very good example. Their market cap is 130 billion, but you look at their revenue, 30 billion in the TTM. Okay, their free cash flow is around $5.5 billion. So realistically, what does Palantir need to do?
Well, let me put a question. Let me put a question back at you, Steve. As Dom said, or Matt, people were buying Tesla because of what they thought could happen. Like, is there any world in which the fundamentals sway a little bit off and people still buy, Wall Street still buys Palantir?
Well,
I mean, that's what happened. That's what happened in 2021, right? I mean,
because
people were paying $40 a share.
Tesla. Look, at some point, numbers matter, and at some point, fundamentals matter, and at some point, the amount of profits the company makes matters. And you can say that a company is going to do X, Y, Z, but until they do it, it's not true.
This goes back to a conversation I was having on SoFi that if Elon wasn't part of Tesla would be nowhere near the valuation. But if it, like, for example, we're buying at $6-7. Imagine Palantir 2030 is supposed to be worth $110 and it somehow is up to $220. All of us would sell at that point. We would deserve to sell, right? And if it's supposed to be 110, then sucks for the people buying it at 100, but they didn't take on the risk we took. So I mean, my question is there a world in which retail and Wall Street gives Palantir the premium, even if, just like they gave Tesla 1 trillion, even though Tesla didn't really deserve it, right? Is there a world in which you could give that to
Can
Palantir?
we stop talking about a share price and talk about market cap?
That's what I'm saying. Market cap.
Okay.
250 would be it would be $250 at 3% dilution every year would be close to about $400 billion market cap. Share price. 500 would be $1 trillion market cap in 2030.
I'd still have half my position, but I would trim.
But that's my question is,
I don't know if I would. I don't. If somehow it pulled that off, I would probably exit. I would probably set it up in stages to exit. I'd probably fully be out by that point.
But here's my question. I think this is a really good question, or at least I want to have the discussion. People gave Tesla the trillion, and some would argue even right now it's overvalued because of a lot of things: robots, energy, all this shit that's really not real. I mean, the customer service on energy I heard is horrible. Robots, whatever. It essentially was Elon, right? Carp is not Elon. He doesn't have the 120 million followers. But you look at Palantir from a government perspective, from an just pure AI play, just like tech that's really, no one can replicate that. Snowflake is not stopping a future pandemic with the CDC. They're not working in Ukraine. Is there any world in which investors collectively give them that additional premium? Not to the tune of $1 trillion,
because it's not flashy,
but still
product.
high.
Look, here's the difference. Tesla is a consumer product. Apple is a consumer product. Microsoft is a consumer product. Amazon is a consumer product and business product with AWS. Palantir is an enterprise software platform. You're never going to get that facade or whatever you want to call it. You're not going to get that it factor because it's not a consumer product. I mean, it can be the greatest enterprise software platform there is, but if you don't have it and people are not buying it in their individual lives, I don't see it getting to some crazy $1 trillion or $500 billion.
I'm not saying those kind of numbers. I would venture to say we're at what, 13, 14 price to sales.
14 and a half. Oh, price of sales. I don't know.
I don't know what it is. I haven't looked at it recently, but it's very affordable. So to answer your question, is it far-fetched to think that in 3 years from now, it can have a price to sales ratio of 30, 35?
But hold on, price to sales is such a bad metric to look at because any company that buys another company on a price to sales methodology, they may never get that money back because it all depends on profitability.
Understand, but to Matt's point about Tesla, these high-flying technology companies that keep innovating and innovating and innovating, people start buying, and value is perceived, right? Like it's
100%.
so like fundamentals and what something is actually worth versus what people are willing to pay for a share price.
Okay, but going on that premise, Dom, and I agree 100% with you on that premise, but going on that premise, can Palantir get that valuation on the premise when people individually are not using the product?
If they have a mass amount of enterprises, more than what they have now, yes. If they don't, then no.
I disagree. They don't have one of these. You know, they don't have a Tesla that's driving around and everybody thinks
you know that companies are building apps on top of their platforms, right? So and people are using their cell phones for integrating with Foundry and using it to get business outcomes.
How many people are actually using that in the, you know, think about how many people.
That's what tells us what the runway is, right?
As a subset of the US. US has what, 380 million people? How many people are actually interengaging with Palantir?
Right. So my point is they have 350 customers, something like that now. Okay, what does it look like when they have
say they double it, go to 700.
Yeah, well, it need to be higher than that. I'm saying let's go 3,000 customers, okay. And by that time, we're now all of a sudden seeing them into actual markets where they're working the full system like Airbus in multiple markets and seeing that expand. I think Wall Street would recognize that, especially if the military piece of the business were to take off, because we know that the military spending will, get better eventually. Not saying that it's not a tall feat, but I don't think, and I'm not saying $1 trillion market. I'm saying here like $100 market share. Like they're at $6. Could they or get to 60? Could they 10x without having a consumer product? Yeah, I think.
Yeah, and I think that's very feasible. I think they could get to, if you give them enough time.
Right, it's going to take time.
I think 100 to 150 billion market cap is reachable in the next 10 years, maybe a little longer, but it's a good replication of a Salesforce, because Salesforce doesn't really have a consumer product outside of business. You make the argument large, small.
Same with IBM. Yeah.
I not to cut you off, but I do not think Salesforce is a good example. It's a good example because they don't have a consumer product. They're SaaS.
That's the only reason why I use it, and they have a 30 billion.
But the problem is they don't have a military business that CodeStrap has argued. I think we all respect his opinion. Hold on, let me get this out. Hold on. CodeStrap has argued the government, Gotham is a $100 billion market cap by itself. That's a $100 billion business by itself. One could argue in a geopolitical world. I'm not even going super technical. I'm just saying if the world gets more shittier, like let's factor that into our analysis. That matters. Second of all, Salesforce doesn't have a technology that is. It's a customer relation data. Like what's so special about
like a lot more than CRM, buddy.
Yeah, but the
Salesforce before you say they're just a CRM.
But the network effects we're talking about with Palantir, I don't think are as integrated deeply when we come to a sales in terms of a Skynet, Airbus.
So hold on. How do you quantify, or how do you put a value on the importance of a software? Because at the end of the day, it comes down to dollars and cents. You can have the software, which is critical to national security and critical to the military. But if the company is not generating a larger revenue and larger profit, how can you actually make an argument that because of how important it is theoretically, it should have a higher valuation?
No, they will. They'll get more money because they'll get more deals. I mean, like I'm not saying they won't.
With Salesforce, the reason why it's a good example is because they are doing 30 billion in revenue and 5.5 billion in free cash flow, and they have 130 billion market cap. So if Palantir software, and I think we all agree how amazing and the value is to these different entities, but how do you actually quantify it? We all speculate that it has amazing value, but it's not showing you the numbers.
The problem also is Salesforce market cap. First of all, Salesforce was at 307 November 12th, 2021.
Down a lot.
Yeah, so the market cap was not 128 billion. It was about 300 billion roundabout. when it was at its highest.
Every company's come down, even Apple's come down.
But that's what I'm saying. In a better interest rate macro environment, would we? That's my question here. Would we not give that premium to Palantir? Because Salesforce was doing less than 30 billion TTM in 2021 when it was at.
Are you asking, would you give them that now, or are you saying in the future?
No, obviously not. I'm asking when the macro gets better, and using Steven's example of them just being a SaaS, not a consumer business, do we still give them that premium when, if they are 60, we might give them an $80 share price or a market cap?
I think they're going to have to definitely get their customer growth up. They're going to have to get over 25% revenue growth year over year. They're going to have to get back to the 30s. And I think that one of the pivots that really will start setting the stock up, of course, the macro plays a role in this, is once they turn profitable, and if they still have a clean balance sheet, and the SBC is lower, I think Wall Street's going to flip their script and be like, okay, we're onto the story now. Like they've listened, they've done it, and doing it their way, and now all of a sudden, Dom Rinaldi's shield stem. I don't know what shield means, but I do own a lot. I'm old.
Trolls in the comments, man.
I do own a lot of STEM, and actually, I'd love to hear his take.
Ooh, I'm a STEM shareholder.
Yeah. As I say, I figured with energy, Matt may even have some STEM.
I'm definitely a STEM shareholder. Interesting company. Admit I'm sending you something if you could throw it up.
Okay. Just on my email.
It goes into the exact conversation we're having.
But yeah, I'll pull it up. But that's just my question, right? I agree with you, Steven. Your example about Salesforce is 100% on the money. It's the best example. It's just that Salesforce.
At some point, it has to come to the numbers. And I just think that too many people think about these huge things. I like to think about what's possible. 150 billion, I think, is possible at some point.
Yeah, I agree. It's possible. The question is, will the share price be worth even more than that because of the Tesla-like premium investors give to Tesla? I know that's an Elon Musk thing.
I don't think it's a Tesla premium. I just don't see it.
Your Salesforce analogy is spot on, actually. I'm looking at when it IPO'd. Keep in mind, we've only been public 2 years. They IPO'd at $3.95 or $4 a share in 2004. 10 years later, they're $54. So that's a little over a 10x there, right? And in 10 years. So where will we be in 8 years from now? Do we think that they could 10x in 8 years from now? And that would put us at 2030.
Yeah, I mean, look, I did a lot of calculations trying to redo my investment thesis and projection out to 2030. I believe these were 3 different scenarios. I did a poor, I did a good, and I did a strong, and I gave them free cash flow multiples of 25, 30, and 35. And look, these are my numbers. This may not occur, obviously. It's in my latest Palantir article, and you'd have to look at the other charts to really understand this, but I'm going to run you through it real quick. My bull case, like what I think is probably the top end by 2030 if it happens, and these are all my numbers. This could all not happen. I mean, I think there's a chance Palantir may only go up by 44% from today's value by 2030 in a very bad scenario that revenue growth continues to stall. But in a good revenue growth market where their free cash flow margin is around 21%, where it was last year, based on a 35x multiple on free cash flow, they could be 112 billion market cap in 2030 if they're generating 3.6 billion in free cash flow. I mean, at a 25 free cash flow multiple and that 3.6 billion free cash flow, that's still a 76 billion market cap. So I think there's a lot of possibilities here, but these are just my opinions. I don't think it has a Tesla network effect as far as the valuation. I think going to 2030, you're not going to see Palantir have a 75 or 76x free cash flow multiple. It's just not going to happen. It's going to continue to come down as they age, and they're going to have to get their margins under control. The margins came down this year. Their growth is coming down. You're going to need that to go back up.
Yeah.
I mean, at the end of the day, And I would that's better to get for Tanner at the end of the day, man.
From now until 2030. I know people in 2020 had some unrealistic returns that weren't normal, but a 6-bagger from now in 8 years, I'll take that all day long.
Yeah, same here. I mean, going up, my true bull case, like the highest end bull case for me is 7.5x from now till 2030. But that's like my top bull range. Now, I don't actually know if I really believe that's going to happen. I think maybe 60 to 80 billion market cap by 2030 is more realistic because unless something changes, I don't see them having the pizzazz that Apple or Tesla does because it's not something tangible in your hand you hold.
Well, one thing I think we're not taking into account is like $1 trillion in 2030 is not going to be $1 trillion today, right? Like that might be the average for
today, but how many companies are actually going to be there?
Yeah, but I mean, Apple, what is it not going to be a $5-6 trillion company by 2030?
You can make an argument Exxon is the most important company in the U.S. and it always has been. You can make a legit argument for that. It's never been. Man, has Exxon ever been over 500 billion market cap?
Yes.
What
in the 2000s?
Okay, I mean, it's never been a trillion.
It was around the same time that Microsoft hit $500 billion.
But to your point, Steven, what you could sum up and just say is that the top, this is a crazy statistic, but the top 10 or 15 S&P 500 companies every decade change.
Oh, if you look at that rolling chart,
Microsoft has been the only one to stay in the last 2 decades.
Them and Exxon are the only ones that over time have always been in it, even if they dropped off, they came back in. I mean, GE was the biggest company for a while. Cisco was the biggest company for a while.
Yeah. So, which goes to your point about if something were to go skyrocket, it's okay to trim. In fact, you should.
Of course. Nobody got hurt taking a profit.
I'm so happy that the news this week with Coupa getting bought out at $85 a share, and I actually trimmed at $340 and sold all my position and put it into Palantir. And I was like, that's a win. That was a really good win.
You sold Coupa at $340?
Yeah.
Nice.
Wow. That's a hell of a win.
It was like at its all-time high. And I was like, I love the company. I've even sold to them, but I don't see, like, it gets to a point where valuation, like to what Steve was saying earlier, I start looking at companies and like, how important are they to the world? Like, how are they mission critical? If we were to do the snap test by David Gartner, if we were to snap our fingers, would we freak out if they were gone? And so when you see some of these crazy valuations, that's why I'm so bullish on NVIDIA, because I think they touch so many things and they will be so much more of an impact to our society.
But how much can NVIDIA really grow the bottom line? They traded such a crazy valuation even today when they've come down so much. Crazy valuation.
But they're becoming a software company now and a platform. Like, they're not a hardware. Like, people are missing the boat on where their actual exponential growth is within autonomous vehicle software and the Omniverse and what they're doing on the gaming side with even gaming inside of TVs, mobile. They have 10 million gamer. I mean, I could do a whole synopsis and tell you why.
I read your articles. I know why you're bullish on.
Yeah, I think they have more. What are they, like 400 billion market cap now?
But they've come down a bunch. Hold on.
Yeah. Like I still believe they're in the next 10 years a $2 trillion market cap.
Yeah, I mean, but that could be the argument that $2 trillion is not that big of a deal. So that's very possible.
5x.
Right?
I'd think a 5x in 10 years.
But once again, think about what I said about Salesforce. Like, I would think some people would still think Salesforce has future growth ahead of them. A great example, you look at Salesforce versus NVIDIA. NVIDIA has done 28.56 billion in revenue in the TTM. Salesforce has done just over 30, yet NVIDIA has a multiple that's 3x larger.
But
that's my point.
Play in more realms.
Exactly. I mean, like, I get,
but it comes down to
fundamental argument.
It comes down to dollars and cents.
No, but hold on, Steven. It doesn't always. If you sold Tesla at $1 trillion, it didn't come down to dollar and cents. It came down to, did you have common sense? You see what I did there? When it was time to sell. So with Palantir, if like, hear me out for a second. If they make a metaverse play, a foundry for crypto, I'm just throwing shit out there, but like, we can throw shit out there assuming that they've earned a little bit of our trust, that they can figure out some crazy shit and really potentially blow it up, just given how many different verticals they're in. If that happens and the market gives them the premium at the right moment, and we get to sell for a really nice premium the way NVIDIA is in comparison to Salesforce, my question is that possible if the dollar and cents don't line up to the reality?
Of course it's possible. Palantir could get a huge valuation at some point. I'm not saying it's not
Mr.
possible.
FB in the chat, I'm not saying that NVIDIA can't go down further. This market is so unpredictable. I'm not saying what it will do in the short term, but that's why when Matt was talking in the beginning of the webinar of he's focused on narrowing down what companies do I want to hold? Who do I think can endure during tough times? Who has a stash of cash and operating cash flow and margins? Obviously with the gaming side declining for NVIDIA, it affected net margins. But at one point, they were doing 32% net profit margins. That's unheard of for a semiconductor company. Tesla, similar. I think they were at 30 net profit margins. So those are the companies we want to hold. And then you do have to have more of your dividend, your reliable ones, so that way it counters when things, set off. That's something that I haven't done a good job of. And, for those who have a more balanced portfolio, it's not as painful during these times.
I want to just quick step while we're in kind of a transition. I want to admit that I was wrong. Exxon never hit 500 billion. It hit 453 billion back in 2013. So I was a little bit off. Sorry about that.
Close enough.
It's not too bad.
But
Shout out to 240
again,
people in the chat. Go ahead.
Exxon is, once again, arguably one of the most important companies because they produce something that everybody needs, whether they think about it or not. And if they go away, and if Chevron goes away, I would argue that that's way worse than Apple going away. Because at the end of the day, if you can't fill up your car, you can't turn on the lights, and you don't have electricity, you got a much bigger problem than not having an iPhone.
But going away how, though? Like, I don't want to be rude, but like, going away how? Like, are they going bankrupt somehow, or is there the oil that they make just disappears?
No, just the premise that we were talking about before. Which companies, if they were to go away, would have the biggest impact? I mean, I would say an energy company would have a bigger impact than Apple going away.
But here's a question. I mean, Berkshire Hathaway has your thesis, right, Stephen? That like physical stuff, energy, like this is the stuff. This is why we invest. But like that stuff doesn't produce. I know the market's down, but it doesn't produce the type of returns.
No,
like the reason Berkshire is up is because they invested in Apple, right? It's like, so your whole argument about if Exxon disappeared, it's like, I don't know if that has any relevance to a share appreciation. You're right. If they disappeared, it would be bad for the world. But like, investors don't care. They care about NVIDIA and the Omniverse.
Not. And you're not going to have, look, the reasons people gravitate toward tech is because it has the best prospect for capital appreciation. And at the end of the day, many investors are only caring about capital appreciation. It's rare that you get an investor like Matt or myself that is fine putting capital to work and having a share price stagnate and just go sideways as long as you're getting an 8% dividend. I've owned Starwood property.
Really playing the long game and being okay with it and doing very disciplined. And that's
good.
I
mean, look, tech is always going to be, because it's cutting edge innovation. It's always going to be where investors flock to, or biotech, for the next big thing to make money, to make real money, hundreds of % increase. You're not going to get that from a Coca-Cola. You're not going to get that from a Devo or a Jeppy or something like that, or a REIT. But
so there were several people in the chat a couple minutes ago who asked us, what are our thoughts on open chat, the open AI chat GPT?
Yeah, let's get into that.
Yeah.
It could change.
Have you guys used it yet? I've used it, and I cannot believe like what it can output based off of just very little instruction.
Yeah, wait 5 years until you have all the data inside of it for all the things that it runs. You're not going to need a movie producer. If you guys listen to All In, Freeberg has done such a great job of really painting a picture of what it can be. It's actually crazy.
Like my buddy, so he just told it to one sentence. I need you to write a customer invite in Washington, D.C. about a VMware Threat Hunter Challenge and explained the benefits. And it wrote a full proposal. It knew that he worked for VMware. It was like something that our marketing team had generated and made, and it did it like that. And I was just like, oh my gosh, like,
Yeah,
wow.
the question is, how many jobs is this going to displace over the next decade?
I don't know.
I've always said I'm worried about AI. I'm worried about self-driving. I'm worried about this open. I mean, it's at some point we're going to make it where there are so many jobs that you don't need physical people for, and that's scary.
Yeah, I mean, it was definitely a scary AI moment when I saw that generated so quickly. I was like, that was the first time seeing something interpreted. It knew what a threat hunter challenge was. It explained the benefits. I was just blown away.
So Dom, think about this. Think about how many books are published on Amazon, right? With Kindle only or even hardcover. Do you even need authors anymore? I mean, on this premise, you can tell it the premise of what you want to read, and it can write a 500-page book.
Yeah.
It's a question of if the end consumer feels the creativity of it, right? Like if I make a video from OpenAI and the script is engaging, but it's not my personality or anything, like, are people going to come back? How much does it cost to me? Because eventually they're going to monetize this, right? How much does it cost to do? Like, I don't think it's getting rid of creativity. I think it's enhancing. It'll help me as a YouTube creator, but I don't think it's replacing me, you know?
At some point, it may, depending on how quickly and how fast it learns. Think about how good it's going to get in 5 or 10 years. But I'm not saying replace creativity. I'm saying it could be you tell a premise for a book, and now you have all these books that an author did not write. And
someone was telling me they're like, kids in college are going to use this just to do all their papers.
100%.
Oh my God, yes.
and
teachers are not going to be able to tell that it's fake.
And you can't tell, and you can't say they're plagiarizing because it's an AI bot that just wrote it.
It's gonna change a lot of things. And like Dom said, marketing departments, communication departments. I mean, those are, think about how
many. But here's the thing. I get everything you're saying, Stephen. What disruption does it do to the big tech companies that exist? Because it's not replacing Google search, I think. I think
that whole premise is a little crazy until
yes,
but it could be proven true. But I think it's got to really grow a lot to replace search.
But also from an operational capacity, there was a Google employee on Reddit. They were talking about the fact that Google's tried to build something like this, and they're obviously experimenting with it. But the most Google searches are unprofitable for Google. Like, people search trillions of times a day or something, and they don't make any money off that, right? So the latency and of costs that it takes to do this. Sam Altman, the founder of OpenAI, said that they were charging 5 cents a OpenAI search over the past couple of weeks. If Google, if they don't monetize that, right? If there's no ads to monetize that, if there's not a business model associated with it, it's just an unprofitable business that doesn't make a lot of sense at the level of scale of Google searches.
Yeah, right? But think about it. They could charge a monthly fee at some point when this gets to a point where it's really good. You charge a couple bucks a month, and they'll monetize it. I mean,
it's scary.
If it's going to be like that, who wouldn't pay $4.99 a month?
Yeah, I mean, there's a case for that. It's just the I don't know if it's $4.99. The amount of search volume, if it replaces Google or puts a nudge into Google, is going to be so vast. That's what I think.
Search. I just, but once again, everything evolves. This could be the evolution that it turns into. It's going to be a decade before we see that. If we change our habits that drastically is a different question.
Yeah.
I think operationally, the question that you asked, it's going to be tremendous operationally for businesses, how it changes their back office services and their operating costs. Because if they can pay an enterprise platform fee of $1,000 a month and get rid of X amount of their employees, from a cost benefit standpoint, that's a real possibility.
Or make their employees more productive. Like, if you're a copywriter for a business, you run their Facebook ads, you have to create great copy. I mean, are we going to trust your brain, or are we going to trust this AI that can make your copy for you, so much more easier?
But okay. So I was actually in a previous position. I'm not going to say where, but I did work for a publicly traded company in their e-commerce division, and full copywriting team, photo team, et cetera, talking about copywriting. Instead of having 20 copywriters, you may only have 3 that's just checking everything that this produces, instead of sitting there and actually writing the copy for everything.
Exactly.
So
Yeah, exactly.
It'll be a shift. It won't be a one-way all, but it'll be a hybrid. Instead of having a bunch of people doing it, you'll have people spot checking and checking everything that the machine spits out.
It's good that Palantir is at the top of its level per the report we got a couple months ago in AI. Because I mean, people were talking about Web3 and crypto and NFTs was the future. That's all bullshit. All of that is bullshit. AI is the future. I mean, generative AI, we can tell.
Anybody that's been able to explain what any of those things actually do?
Well, so
let me finish. Because I'm not talking about Bitcoin.
Yeah.
I'm not talking about Ethereum, and I'm not talking about XRP. Okay. I am talking about all these other ones that popped up and got really popular. Has anybody actually made any? People have tried to explain it to me so many times. And I'm like, I don't see it. It's not that I don't understand what you're saying. I don't see it and I don't get it.
I think a lot of companies are trying to make money up. So Andreessen Horowitz, one of the biggest venture capitalists in the world, they raised $4.5 billion in their crypto fund. They're going to make $900 million off management fees from that fund. I mean, when you have $1 billion in management fees on the line and you're the most influential investor outside of Sequoia in the private markets, you're going to make crypto a thing. You're going to try to because you just raised $4.5 billion for it. Katie Huan, I might be saying her name wrong. She was a partner at Andreessen. She left Andreessen 5 months ago. She raised $2 billion for her crypto fund. She's an ex-Stanford professor. I mean, like, LPs, limited partners, have just been throwing money at this crypto shit, assuming that it's going to work, when in reality, AI is the thing that we can actually see improving businesses, not Web3 based NFT monkeys and crypto, like outside of Bitcoin, Ethereum. Obviously.
Yeah, I didn't understand the NFT thing, but look, I think that there is a use case. Like, I personally, if you really read up on XRP and put the lawsuit aside, I'm not talking about any of that. The actual use case for XRP to me was interesting because you could buy XRP in US dollars, transfer it to somebody in Japan, it settles in 3 seconds and they can pull it out in yen. And there's no wires, it doesn't go through intermediaries overseas, and it completely is a frictionless transfer. To me, that was interesting. But there's so many cryptos, I didn't understand it when people tried to explain the use case to me.
Yeah, I mean, I think there's some use cases. I don't think there's a lot. But that's why I think AI is Foundry for crypto. We haven't heard shit about it. Why? Because it's probably not going to be a thing at the end of the day. Like, I think
it depends what the crypto industry turns into. I think it's very.
But I think, Steven, if it was going to be a thing, it would be now with all these hacks and everything that's going on. Isn't that what Foundry for crypto is supposed to stop? Right. And it's like, if you're not helping now in the bear market when crypto companies seemingly need it, that means they're not trying to sell it. I don't think they have a dedicated sales force to sell this shit. Like, it doesn't seem.
Yeah, I think the big question people need to answer is, why do you need crypto? Like, what does it really let you do? You know, I'm not a crypto person, so I don't know.
Yeah.
You know, I screwed up. One of the tech guys in, I want to say 2011 or 2012 that I worked with was like, we should build a mining computer and mine Bitcoin when it's at $7 a Bitcoin. And we decided not to. And then my wife said, just buy some. And to be honest with you, I couldn't figure out how to do it. It was the Wild West. It was crazy. I mean, you had people that you would meet up with and they would transfer like phone to phone. It was the Wild West. Mt. Gox had just got hacked. It was like $7 a Bitcoin. Biggest regret, not buying it back then, or at least putting the time in to figure it out, because it was the greatest investment ever, buying Bitcoin back then.
No, that's going to be Palantir, actually. So
Elon Musk is no longer on the board for OpenAI. He walked away in 2018. I thought this was his baby, but it looks
wasn't he involved in starting it?
He was, and he funded it. And then in 2019, Microsoft gave them $1 billion. And so Elon is one of the founders, but they're saying that he's really not attached to it anymore. I don't know how true that is, but Sam Altman's now been the CEO for a while, and just thought that was really interesting. And Microsoft's one of their biggest investors.
Yeah, I mean, how much more can Elon take on? The guy's running.
Yeah,
I mean,
I don't know how that guy lives and like just doesn't die of a heart attack.
I don't know how this guy sleeps. I mean,
Yeah,
at some point, you need more than 2 or 3 hours a night of sleep.
yeah. Your health is definitely gonna.
I mean, Tesla,
deteriorate.
SpaceX, Boring, and Twitter. I mean,
He has his responsibilities full.
pretty amazing.
Well, I think that's a good way to end it, Amit.
I think so too. I think someone just joined and then they left the StreamYard. We didn't have anyone join. So
Yeah,
that
I'm
sucks.
sad. I wanted somebody to join, and
Yeah, I mean, we'll hang on for like one more minute. If anyone wants to join real quick, Dom, if you got to go, you can go.
No.
But I mean, from an AI play, Palantir is very interesting. I think everybody can agree AI is the future. In whatever form it's going to be, AI is going to be the future.
Yep.
Yeah, it's gonna be exciting. It's gonna be really, especially like if they can automate these YouTube thumbnails, and I can just say, I want Elon kissing the Twitter logo, and then it just comes up with it. That's super cool.
that'd be nice. I'm not.
That'd be really
That's you guys will probably find out that that's my weakest.
Well,
link
thumbnails
is
are hard
my
for everybody,
thumbnails.
man, because you only have a second to get someone's attention when they're scrolling, right? And if you don't come up with something interesting, they're not going to click, and so it can.
That's
really...
why I got into writing. Honestly, like it was like having to do all the thumbnails, the SEO, everything. I was like, man, I don't have time for this.
Yeah, it's a lot.
I admire what you're doing a bit, having that, and then the hustle on the side with the day.
No, but even writing, it can help with that. Like, there's just so many use cases for it, So it's
A tremendous
an
amount of
exciting
use cases. I mean, do we think this company is ever going to go public?
That was another question I thought about. I was like, man, how much money would go in on an IPO on that puppy?
Especially when so many think AI is the next evolution. I mean, tremendous.
It's the next
amount of
computing
money will come
platform.
from- Yeah,
It's so interesting that at this time of our life, like we've all lived through going from the library to the computer. I was born in 97, but still, like, it was still starting during that time. And now we're going from the computer to the super, and it's supercomputer, and it's happening in our lifetime. It's just an amazing time to be alive and see this happen. So it'll be cool.
yeah. The next transformation is going to be really interesting. And Palantir is positioned strategically for the next 10 years. And that's why I'm so bullish on them. Again, I was neutral. Now I'm very bullish on them, but a lot has to go right. Like I'm not under any delusion that this stock couldn't go down to $4 or $5.
One thing we forgot to mention real quick is that if things go really good in the next couple of years and they develop the retail cult base, the sort of Wall Street bets type of base, I mean, that might help carry them to that premium that I'm talking about. Like if retail really gets into it.
It could. It definitely could.
Because think about how many exciting stocks are out there in the market. There's not that many that people get excited about.
What gets the retail base excited?
Return.
Yeah.
No, but take that out of it because it wasn't returns for Tesla.
Well, here's the question right now, Steven. Why is there such a big community on Palantir right now? What is getting us excited right now?
I think Palantir, unlike other stocks, I think people do a tremendous amount of research and look at the different applications that they're in and actually really understand. I don't think people really research Amazon the way that they do Palantir. I mean, how many people can sit there and tell you that Amazon's cash from operations has declined tremendously quarter over quarter for the past 6 quarters, or that they are free cash flow negative? I mean, I don't think many people can tell you that, but so many people can talk about this and that with Palantir, all the deals that they're doing and applications and creating the platforms that have tentacles into all these different apparatuses with Skywise and everything else. I mean, the amount of research is amazing. People do. You look at some of these Substacks people write.
But that's my point. If Palantir goes up 5x in the next, I don't know, 3-4 years, let's say it really goes well, even 2 years when the macro gets better, and then all this content gets created even more, the hype builds it, but now the hype is justified because it's given a return. I mean, that could propel. I mean, that's what happened with Tesla, right? It wasn't the revenues that got it to be $1 trillion company or $500 billion company. It was the constant Gary Blacks of the world, all these people that established themselves as these authorities and built the following. And then obviously you got Elon. I don't think that happens to the scale that it happened with Tesla to Palantir, but it could happen.
It's very hard to get to that scale. Very hard.
That's why I don't think it goes to that scale.
I got to bounce. I wanted to leave you with this fun fact. just found out, like digging in more research on OpenAI, one of their first investors was Peter Thiel.
Yeah, I knew
Of course. Of course.
That guy just finds everything.
Everything. All right, let's end it now because Dom's got to leave as well. Thank you, everybody. 222 people. Great turnout. Check out everyone's channels in the descriptions. We'll see you next week for Palantir Weekly number 44. Thank you, everybody. Appreciate you.
44.
Bye.